Hi everyone, this is your portfolio manager June Bei Lu. Welcome. What a quarter it has been. We're starting off very uncertain about the world, the Liberation Day in April, into a very full bull market in May, and then into June, a bit of consolidation, tax loss selling, and then racing into the year end. The share market has pulled through very, very well, and so have your portfolio. Now, I think last time we spoke was about some of the key positions that we bought more of when the market was a bit uncertain about the outlook. These companies include the Promedicus, the Life 360, and the like. And I'm pleased to say all of these companies have done incredibly well in the quarter. In the case of Promedicus, it's gone up over 40%. And in the case of Life 360, it's gone up over 50%. Now, these are big numbers. But remember, when they were falling in the end of March and beginning of April, we talked about the earnings of those companies don't get impacted by the tariff. And they just got a whole lot cheaper. That was a rare opportunity. And then we bought lots of them. They all done very, very well. Now, in the case of Life 360, they also had a great result. The result continued to show strength in the US market, particularly green shoots. Well, green shoots are early days of green shoots of its advertising model. We think this company is going to rule the world. Now, during the quarter, we also had a takeover bid for one of our portfolio company. That's quite rare. We're very happy about it. Now, Santos has been the value player of the oil sector for many years. And finally, we've got a great bid from the Abu Dhabi National Oil Corp for a great price and all cash. Now, we expect the share price of Santos continue to track higher as we get closer to the outcome of the deal. Also in the quarter, some of our active underweights also have done very, very well for us. One of the big one is CSL. This company just couldn't get things right at this moment. Share price down over 7%, whereas the market's gone up 7%. Now, this is one of our largest underweights. The reason it's done so poorly, it's partly because it's also affected potentially by the tariff. However, it's mainly at company's own doing. It has missed its own guidance for quite some time, and now we're heading into the end of 2025 financial year. We still expect companies to not meet its expectations, and outlook potentially will be a little bit softer. Well, another one that have delivered a lot of return for us is our underweight position in Domino's. Now, the company has gone through quite challenging few years, and now with the management change, we hope at some point we will find the bottom. But gosh, those fast food industry is doing very, very poorly. It's partly because of domestic retail is going through a bit of challenges, but we do think with the rate cut, potentially the sector will do better in the next 12 months. And of course, during the quarter, IPO was well and truly doing well now, the IPO markets. Now, we're very excited to be the cornerstone investor in two of the most successful IPO so far this year is Virgin and also Greatland Gold. Now, Virgin, the IPO was launched right in the middle of the Middle East war, and oil price spike and gold price spike, and yet the share price has done incredibly well on first day of listing and continue to track higher. Now, we like Virgin because it is in the middle of its efficiency program. It's going to have a higher earnings growth compared to the closest peer Qantas, and it is cheaper. And our view is that it will continue to close the valuation gap and do well for the portfolio. Greatland Gold, it's we like the quality of the asset, and with its transition into the Australian market, we think it will continue to deliver outperformance compared to some of its gold peers. Now, looking ahead into the next financial year, we remain very, very positive. We think the fundamental of the share market is very strong, particularly here in Australia. The share market has demonstrated incredible resilience throughout all this uncertainty. Now, in Australia, we are just about to get another rate cut, and then with more to go. Now, if you look at the history of the share market, any time where we get interest rate cut when it's not a recession is fantastically bullish for the share market. So our view, we're bullish. And heading into this reporting season in August, we think the corporates, yes, there will be softer, patchy earnings for the past 12 months, but looking ahead, we do think that the corporates will give a more reasonable outlook. And with the market tracking where it is, some sectors are very reasonable valuations, and some of those cyclical sectors will continue to like them, especially with more rate cuts on the card. These are your discretionary space, your property trust, your housing-linked sectors. Companies like REA and Seek will be the next outperformers out of the growth space. So thank you very much, and I look forward to update you very soon. But do remember, we've got a webinar on the 9th of July at 11 a.m. Thank you very much.